We're live.
You need something like on the board, like a countdown clicker. Is it 5, 4? The rocket ship goes up.
Yeah.
I don't know.
To the moon.
Instead of me just whispering, "Are we live yet? Can I stop swearing?" So as you can read, hopefully you're reading or listening, but this is basically informational. This is all for fun. We're just a couple people talking. Don't take our stuff as investment advice. We're just talking about stuff that we like to look at and have some fun doing it. So anyways, moving on. Good morning, fellas. This is afternoon. I don't know. The day went by fast.
Yeah, it was a good day. Flying by.
Yeah.
This whole past week flew by.
It did. I actually went snowboarding over the weekend for the first time in a long time. It was fun. It was a good time.
Mm-hmm.
And, things were pumping. So it was great. Made for a much more relaxing weekend. So after a year of down only, we got a little pumping. Yay. What's happening? Green is good. We'll just jump into it. The crypto markets had a nice little movement to the upside from late last week through the weekend, and kind of hovering around some resistance, and hopefully we see some more movement towards the end of this week. We'll probably get a little pullback, I would imagine, at some point in time, and then continue to move up. But I mean, I'll just start with Bitcoin because we're here, and it is forged in crypto, so might as well start with crypto, even though legacy markets definitely have some stuff that happened. Really, for me, one of the cool things that came about is the Ichi cloud, going full bull, right? Your lagging span is above price. Your baseline conversion line cross is there, trading above the cloud, and the cloud's green. First time this has happened since, what is this here? 21? October 21. So over a year. Year and a few months, almost a year and a half. So it's been a long time. And if you see the cloud itself, obviously follows price, but literally for a year we've been down only. Last November 21 just continued. We thought we might have had a little reprieve in this area here, but no, we did not. So this is nice. It's nice to see it, moving into a direction that can maybe get us a little bit of a rally. Do I think this is the start of the bull market? I guess it depends on what people like to call bull markets and bear markets.
Yeah.
And I actually want to get that out of the way, because you can make a lot of money when it's not the, in quotations, bull market, right?
Oh, yeah.
And a lot of people consider the bull market, once we go past the previous all-time high, which that's a long ways away.
Yeah.
You're talking about going from
3x, 4x.
Yeah, 2.5 or 3.5 times what we were sitting at, 200, a little over 200%. So that's a lot of movement before you get to the all-time high. And so for me, I just look at a few things that I want to see. A little bit of consolidation, and then some trend movement to the upside. Right now we have some consolidation. When we look at from June to about November-ish time frame, we had some decent consolidation, a little push down. This was the FTX debacle.
Yep.
And then when you look at the grand scheme of things, that little move down with one of the largest collapses in crypto,
accounting history,
in crypto and like legacy history, like just ridiculous. That little move there and this consolidation move up makes me really, really like excited to see where we can go here.
Yeah.
So,
I mean, the fact that it's already completely recovered from the FTX,
completely recovered.
I mean, that
from November till now in one of the largest debacles in history. Yeah. Okay, great. What happened? I don't know. Let's move on. Outside of
not using FTX.
Yeah, exactly. Yeah. Outside of, something larger like Genesis collapsing or, anything, super major, things look pretty good. Not saying it's up only from here, because we're still going to get, you still have macro stuff that's going to affect it with, the inflation numbers still are heavy on the backs of the economy, and what that ripple effect within, real estate and business and everything else. Everybody talks real estate, right? But obviously interest rates affect everything. Businesses are huge. Like most businesses leverage their assets to purchase more of whatever they need, employment, equipment, whatnot. And so they're using that interest to move their business into a direction where they can, make more money. Well, it's costing them more. Where does that go to? It goes to the consumer, right? So
it all gets passed to the consumer.
It always does. So it's just not real estate that these interest rates affect. It's everything. So it's a big deal when we talk about the CPI. And last week when it came through, and it was sitting at that, what were we at, 6.5. And so it was way lower than what we were at a month beforehand.
I think it was 7.1, wasn't it?
7.1
to 6.5.
Yeah, well, in Trueflation, you can see it's a little different, but we're kind of flattening out a little bit, which is, it's interesting. It's interesting to say the least. Definitely lower. There's a new one.
The
not
PPI.
New one, but it's the PPI, which those come out tomorrow, I think, right?
Yeah, tomorrow.
So PPI is the producer price index. It's ultimately a precursor to the consumer price index. So it's basically the step before it gets to the consumer. So it'll kind of tell what is going to happen with the next CPI, essentially, right? Like, oh, look, PPI. It should be very similar to what the CPI was, I would imagine. But, we'll see. I think there's a lot of people waiting on that.
I think if it's similar or even slightly improved from a week ago, the CPI a week ago, then that's,
big move.
Really good news. The market likes that, I think.
Yeah. And right now, the interesting, as you can see with this is SPY. I'll take this little red line off here because it scares people. But maybe if I can get rid of lag, there we go. I drew this a long time ago, and we were kind of doing this broadening wedge. And normally the broadening wedge is a reversal pattern, depending on which way it's going to go. So if it's a broadening wedge, it's going down, it's going to reverse and go to the upside. The nice thing we're seeing is a couple of, key points. We have an inflection point with this low in around the 340 mark on the SPY.
Yeah.
We had some good, reaction off of the top of this broadening wedge, and we had another higher low. We never reached the bottom part of this broadening wedge, which is the next, point where you would imagine this to turn over and then do it again. Yeah. But what we're seeing is a little more consolidation in this overall area of, the below 400, essentially. I don't know. We have some positive stuff coming.
If we can break through that, that could be real good.
And I think it will, depending at the end of the month, what they do decide to do with, what they decide to raise rates by. It could be
quarter point, half point.
I'm leaning toward, obviously this is my ambitious approach, but I would be leaning towards a quarter point, just looking at what we're seeing in the markets right now. I think consumer confidence is returning to the markets in a certain degree, and the overall economic uptick that comes from that, I think could potentially lead to a situation where they don't need to raise it another half point.
We did a half point last time, right?
Yeah, we did.
Yeah.
What do you think, Nate?
I'm sticking with a half point. I think it's going to be a half point, just because we're not through where they want us to be yet. I think they want to still put pressure on everything, but maybe they're getting scared. Maybe they're seeing a lot of the effects that are coming through, and if they go too strong, and continue with that, it may have more adverse effects and kind of swing it in the other direction.
Well, I do think there still is more to come, especially in the kind of global recession scheme of things. It's not just the US. Everyone's still so I don't know if over leverage isn't the right term, but they're still spread too thin from COVID. People put way too much. Governments were just pumping way too much money into these programs and stuff, and we still haven't felt the full effects of that, I don't think.
Yeah.
And
I think that's what this year is, right? It's a year of, okay, we had a down only year. We had tons of inflation that we were trying to push down. And then this year is just kind of the recovery. So I could see a quarter point, with that in mind, knowing they can swing back to a half point if they need to, a little bit later.
Yeah.
I don't know. I want a quarter point. Yeah. I think I know the markets want a quarter point. I know
it's not what you want,
but I just think
it's what you need. They know what you need, Michael.
Yeah. Well, Well, the Fed has been telling us we need to get inflation under control, and it's not where they want it. And I don't know. They've been pretty consistent. So I still think 50 is more likely. I think 50 basis points.
We'll see if Blake's right.
I hope I'm right.
I'm going to high five him.
Right.
He's a quarter point. It'd be great because I think you see a market explosion at a quarter of a point.
Yep.
Because I think everybody's pricing in a half point. So it'll be interesting to see with what happens on that side.
I mean, if I was the Fed, I do a half point.
You probably reduce rates if you were the Fed.
No, I see what they're trying to
Let's
do.
Go back to zero.
They're trying to slow it down, and it's working. So it's like I don't see them like stopping that, because if they go to 25 and then inflation looks worse, then they're kind of chasing their tail again, and it's hard to get inflation under control. It's really hard. So I'm thinking 50, but if it's 25, I'm going to be real happy.
The other thing that we got to look at is, do they want? So let's say this is trueflation is the number, right? It's around 5%. Do they really want this down in the 2% or 3% rate?
That's what they keep saying.
Why? Is that really what they want?
Yes.
I don't think so, man. Maybe. I think they like it sitting in that, 2 to 3%, maybe. I don't know. We'll see.
The thing is, inflation hurts everyone. Like the rich make the markets, manipulate the markets sometimes,
Yeah.
And inflation hurts them just as much as it hurts the little guy. Like if the amount of money you have buys a lot less.
Yep.
So,
but you're actually thinking that they care about the little guy.
No, I'm opposite. I'm not saying they care.
Okay.
I'm saying they care about themselves.
Gotcha.
And the rich care about inflation because the $1 billion they're sitting on is worth a lot less if inflation's 5% versus 2%.
They're fine. Don't worry about the billionaires.
I don't worry about them, but they run the world.
Well, let's in reality, we're forged in crypto, and so we're gonna move back to we want to talk about the overall economic side because it's obviously affecting everything that's happening here. But moving back to crypto itself, we again really excited about where we're sitting with this last pump. Now, is it a bull trap? 100% could be.
Yeah.
I don't think so, though. I think we've got a little bit of reprieve. I don't think it goes straight up. I think the high for the year potentially in the 34 to 36 range. Maybe it pokes a line, a wick up into 40, and we drop back down. But personally, I think the lows are in. I don't think we're gonna go and see below 15K, 15.3. I think those are the lows.
Yeah.
So a little bit of upside this year and a lot of sideways. But overall, I think there's some ability to position yourself into some really good tokens that are out there. We've covered a lot of them that we really like. Let's start with Magic.
Yeah.
Magic's one of the first ones that,
we treasure ecosystem.
Yeah. We put it
for those that don't know. I'll even throw that.
Well, we got a couple more articles of the games coming out soon.
Yeah.
But we have one that covers over Magic and the treasure ecosystem. It's really nice. It has some really cool stuff in terms of a blockchain gaming ecosystem that is really focused on the players and the community. They have some games. They have a lot of people that interact with everything throughout their ecosystem.
They have a fully operational DAO.
Which is fantastic.
Basically directly determines what projects they're going to be into. Even going as far as what percentage are you going to allocate into those projects. You can get SDKs and developer tools directly from their website if you want to be a builder. They've completely gamified their marketplace. They have minting schedules and calendars to show. It basically makes a one-stop shop where you don't have to worry about tracking all these different projects. Right? It can be a massive headache, and they really make it simple.
And so this is the Magic chart. So we put Magic up before it got listed on Coinbase. I think our article came out.
When did I release it?
It's a little bit before. It ultimately is it's a short time frame, so you can't build a lot off of it. So it's only going off of the little bit of time frame that you could have here. So it got listed on Coinbase and Binance pretty close together.
Yeah, we posted our article on it on the 20th of December.
Oh yeah, so we were well before. well before it opened up in Coinbase and Binance.
Yep.
But what we're seeing is a little consolidation. It looks nice in the terms of the movement, but it's been following the regular, tokenomics of or the regular tokens that are out there that have had a nice move from last week to this week. But what we really like is the actual overall fundamentals of Magic. Looks really nice.
Single token across the entire ecosystem. I mean, that's
that's pretty awesome.
It's great.
You don't spread that value across. I mean, if you bring in 10 games and they all have their own tokens, you're kind of devaluing your token across 10 games.
Exactly.
10 different, different options out there. So
I'm curious to see what the Coinbase chart looks like.
I believe the one that's...
Oh, yeah, because it came out on the 9th. So here you can see this is a Coinbase listing. I love it. Coinbase sucks. So Coinbase lists here, drops immediately down to the, what is this, the 40 cents range.
Yep.
And
Which
then
you called,
Binance,
by the way, because I was foolish. I was like, oh, it's going to get on exchange. It's going to go up from here. And you're
everything,
like, no, it's not.
No, Coinbase lists it. And guess what? It's a liquid. It's for anybody that needs liquidity to get out. Coinbase has been the death of any token.
Yeah, you were 100% right on that.
The difference with this one is the token distribution works a lot more in favor of the over-the-counter purchaser of the token, right? So 33% goes to the team, but there's lockup periods.
Yep.
So there's not a lot that they can sell. So the actual amount that goes out is less. Now, here's the Binance listing. And you can see the volume profile here with the Binance listing of just straight up
massive.
Yeah, hitting 93 cents. It's an interesting chart. I mean, I might use this one a little bit more. You can see the volume. The volume on this is a lot nicer. But again, after that, we dipped back down and did some consolidation. But this is true with everything that was going on in the ecosystem. And then, we've just moved up. Nice. We regained this into support around the 70-cent range, which we did a lot faster than I thought. But overall looks really good. I mean, I like Magic I hold it.
Yep.
So I've bought back in and I'm holding Magic from about 55 cents, but I put that out in the Discord. People know.
Yeah, I bought in at 52 and then I sold at 72. So you guys could do well.
Wait,
you're welcome.
Wait, are you a trader?
I took profit. I was happy.
Michael likes to take profit. He likes money. Yeah. So he gets in and he gets out.
Yeah, but I'm hoping for a option to re-enter.
Yeah.
We'll see if it comes.
Let's see. One of the things that we talked about, I'm going to pull up here too, is the BTC ETH or ETH BTC.
Yeah.
And not that I trade ETH BTC on like a macro level, or like on an exchange, I should say, or longing it and shorting it. But what I like to do is I just like to look and see, what's it looking like, right? You can see there's some obviously lines that I've drawn in here a lot. We were talking about this morning.
You should probably erase those green lines.
They always confuse people. It just gives ideas of, kind of where I can see it going. So what it shows me is ETH value in relation to the Bitcoin, right? And as we were talking about this morning, in reality, it's the same value. If you would have held one or the other, your USD value would have been the same as if you were just holding it from May 21.
Yep.
Right. Sorry, I shouldn't say your USD value, but yes, the value of them together as in terms of USD is the same as in from May of 2021.
The conversion was basically the same. They were, they're the third of the price of where they were.
So there hasn't been a lot of movement in terms of upside or downside. If you go all the way back to June of 17, you can see some huge movement up and down. But overall, from there until this is September of 19, that's when the movement and the transition to ETH really kind of started to take hold and move itself back into this range of where we're sitting at now, right? The overall thesis is a lot of people think ETH is going to flip Bitcoin in terms of market cap, the flippening. And I don't know the exact number, but I think it has to be at like 0.9, maybe, which we're currently sitting at 0.7 or 0.09, I should say. Right now we're at 0.074. I'd have to look at it. I'd have to do the numbers to see what it comes out to. But regardless, seeing that potential It can't be 0.9. It has to be maybe 0.19. Maybe it's 0.19. Anyways,
When that flips.
Now, this is a long consolidation here up at the top. Like I said, over time. And for me, it points more in the direction of moving upwards rather than downwards. How this trend line for me is another, a place that I wouldn't want it to see. If it breaks down, I would see it, dropping lower and then consolidating more down there. And then we're looking at a whole different scenario. Bitcoin itself, I think, with the fear of FTX, and it kind of put the fear in the institutional side.
Yep.
Bitcoin's not going to flip, or ETH will flip Bitcoin unless Bitcoin takes a hold of a larger market. And for me, that has to be extremely large.
Governments,
right? Like Bitcoin is they're going to add it to their books as some sort of
reserve
commodity.
Yeah,
perhaps.
Yeah. But does it happen? I don't know. I like the looks of ETH better overall. I still like Bitcoin. I mean, I love Bitcoin. I love what it stands for, what it can do in terms of securing your own assets.
Mm-hmm.
But Ethereum just has so much more being worked on it. And then we go into your big plays with different layer ones like Sol, AVAX, Polygon, Arbitrum, a bunch of those that are out there that can really make waves. And we're seeing that with Sol. Sol has I don't know, it had a nice pump as well, just along with everything else. So it's like they're all kind of following each other. Some are doing more than others, and that's where you can get the real alpha, right?
Yep.
Mm-hmm.
What happens? What was the first mover before all this stuff happened? It was Gala, right?
Yeah.
Gala, but it was a produced pump. It wasn't.
It was a fundamental pump to a degree. Like it was more of that fun. I think the fact that they they announced that they acquired that mobile studio.
That was the first big one. Yep.
The onboarding of these players, the potential growth of moving their games to the mobile sector. I think it is that kind of consumer confidence part. If people being like, oh shoot, Gala's finally making the moves that I was expecting him to make. This is a good re-entry point.
Yeah, and I think we saw. I mean, the moment that happened, we were talking about it internally. I bought a bunch of Gala at that point in time, and I traded out. Throughout the time frame, I don't hold outside of my node distributions. I don't hold any more of it. But it's not that I'm not going to get back into it. I just don't like to chase pumps. So, and I'm exposed to Gala in a lot of other areas, so it's fine. But it does look like the similar blockchain gaming metaverse tokens followed suit after that pump, which was funny. We saw the same thing in 2021 with those same tokens, whether it be Sand or Mana
for Decentraland. Had a really nice week.
Yeah, Mana did really well. Let's see here. But see, it looks very similar, right? They look the same. They have the same structure, same pattern.
Even the weekly candle structure looks
100%
really identical.
Yeah,
but it all looks like to me like it's hitting up against some resistance right now. So just kind of watching closely to see where we go. Almost expecting us to pull back a bit.
They're all waiting on PPI numbers.
Yeah, I mean maybe a little bit.
I mean the overall, I think we see some decoupling of the smaller assets. This goes back to kind of the DeFi summer, right? DeFi in 2020 had its own little bull run, and it was separate from everything else that was going on, right? Other things were doing fine. There was more consolidation than anything, but DeFi, it just took off. Your Uniswaps and all those DeFi protocols really, they went crazy. They were 2, 3, 4, 5x in a matter of a month or two. And it just kind of got renamed as DeFi Summer. Well, it was this niche market that a lot of people were getting into. And I think, and I've been talking about this a long time, is the metaverse blockchain gaming side has the possibility of doing a similar type of thing, of decoupling a little bit and moving in a direction that is where everything else is kind of sideways and maybe a little bit up. It's going to outperform.
Well, I think long term, that's what you want. that decoupling is the best thing that can happen, right? Because I
Yeah.
mean, you see it in legacy markets, it's pretty rare that, you know, you can look at Pepsi and its stock correlation to Tesla. It probably isn't that correlated in the grand scheme of things. Like, because of the industry differences, I think that right now there still is too much of a centralization. Like, Decentraland is pretty different than Gala.
Oh yeah.
But the fact that it's
Right.
following the same type of thing, well, that's cool for now. But what if Decentraland's still providing amazing utility to its customers and Gala prices going down and you see Mana go down because of that? It's worrying.
It's like I was saying, it's the DeFi, you know, just because Uniswap and was it Bancor or I mean there was a ton of them. Like they all had different protocols. Like Uniswap is a decentralized exchange. You had lending platforms. You had leveraged trading platforms that were able to, you know, go through, but they all saw a pump, right? And so when you think of Decentraland and Gala and Sand and, you know, I mean,
Magic.
Axie, Magic, you know, all these, they're all kind of correlated together in that gaming metaverse play. And so I think they all see a similar movement. Like if you looked at their charts, they would look the same. Some will outperform others, but overall, I think as a whole, that market will probably outperform a lot of other things.
Yeah.
So in 2020, 2021, it was there. The idea of it was great, but it was, and there were some amazing gains in all those, but it just wasn't what people thought it was going to be. Right. And you're starting to see stuff being built like with Magic. And if what Gala is saying they're going to do this year comes out with the mobile gaming company and the Burns and all that stuff, finally start to come to fruition in bringing some awesome blockchain games, right? And some awesome community involvement and a real play to earn, play to own, you know, free to play ecosystem that can benefit a lot of people. And people will see that. I think gaming is transcendent to so many people. That's a great way for people to kind of, you know, idealize what's going to happen potentially. So,
and when you think about it, it could be, you know, gaming hopefully should be the biggest onboarding event for people into crypto to a degree, right? I mean, like if you get the gaming audience, which is in reality a pretty lazy group of people on the grand scheme of things, I mean, if you're able to convince that group of people to onboard to a new system, I mean, I think you see the trickle down effect of that. If your favorite streamers are playing blockchain games, I mean, it just keeps perpetuating more people into the system.
Well, and that's exactly what you said. When you start to see people playing them, you start to see that stuff really coming to
It becomes commonplace,
right? And the mobile acquisition is huge, right? Whether they have 20 million gamers or not, they have a lot, right? Even if they had 1 million gamers or 5 million gamers that are on that mobile platform, to start to transition them over is huge. You start to see how easy it can be and how you can make this so those gamers can own their own assets, and it becomes a really powerful tool. And if they use it correctly, I think it's great. I think Gala can do really well. So,
yeah, I think it's about bridging those Web 2 people over and then making it seamless and just click on, start playing, and then teach them about blockchain as they want to learn about it.
I think the only other thing on the crypto side I wanted to kind of touch on that kind of goes with, you know, blockchain gaming, but maybe not really, but just the NFT side is I'm a big fan of LooksRare. Now there's other protocols that are coming out, but LooksRare throughout everything since they released themselves have been building, constantly adding to their platform and how they structure it. People will argue how they released the schedule was a little shady. The one thing they did do is they released it completely open to everybody to see how that was going to happen. So the shadiness really only comes down to how you perceive it. And did you read what was happening in their white paper? Was it right or wrong? I don't know. I mean, they made a lot of money on their end, but they've also been putting a lot of time and effort into their protocol. And it is it's one of my favorites right now for a long-term hold, personally. So I'm back in. I mean, I'm fully allocated right now because I think we're going to see at least a mini little run here in most markets, and so I'm back in LooksRare.
You want to pull up the chart?
Yeah, I'm going to right now. I was just gonna take off some of the. So let's get rid of my little green lines. Nobody likes my green lines. Well, people probably like the green lines. They just don't like when I draw
Yeah.
the red lines.
The green lines are okay.
Yeah, it's true. So, Ichi Cloud, I just like to see it again. If people are just watching this from, you're new to it, I like the Ichi Cloud and it's short for Ichimoku Cloud, which was a Japanese, I can't remember the name of the guy, the Japanese trader that created it, but it's a way to really kind of see trend reversals really easily. If you're looking over a bunch of charts right away, and you can look at it right now and you can say, oh, we're getting really close to being bullish on this entire protocol. And again, you see, long drawn out consolidations. This looks like a nice, low here, and then moved into another higher low around the 14 cents, and hence moved through this last high to create a higher high over the last one. We're sitting at resistance on the Ichimoku Cloud here, but you can see it, if you just draw it back, it's from this consolidation, from early September, October last year. And if you trade the Ichimoku Cloud, you're looking at this, you're at about 25% allocation, with being bullish. You have your lagging span is above price. Your baselines and conversion line is it's made its move. Now we're waiting for it to trade above the cloud and the cloud to turn green, which you can see it's getting really close. It'll turn green here in the next couple of days, depending on price movement, and then depending on where it moves here. Then you're bullish. Then you're looking at trying to find, if you're not in from down low here, you're looking for entries for it to kind of come back and consolidate and then move further. And so I really like Looks Rare, both technically and just fundamentally with what they're doing, and they're an NFT marketplace, so it's a fun one.
And the protocol is pretty cool too, as far as giving back the fees if you stake it. I don't know if everybody knows about that.
Tell us about it, Michael.
Yeah. Well,
tell us about it. What do you got?
So if you go to Looks Rare site, you can see that if you stake it, at one point this was in like the hundreds, almost 1,000% early on, which was stupid high and fun for a minute. But right now I think it's at 20% or something last time I checked. But if you want to buy and hold, you basically stake your looks, and then you share in the fees that Looks Rare collects. Like OpenSea, makes a lot of money, and that all goes to the owners. What's cool about Looks Rare is all the fees go to the token holders that are staking it. And so 20% to me looks puny compared to what it was, but 20% compared to anything else is still pretty great. So
what are you getting? You're getting looks as you're getting 20% APY, and that's paid to you in looks for staking, correct?
Yes.
Yep.
You can do the looks and WETH if you want, but you get a little more as far as looks. And so if you're like long-term bullish, you think it's at a lower price and you want more, you can choose that looks compounder on top there.
So you can see here it says 100% of looks trading fees are distributed between creators and wallets that commit looks tokens along with bonus looks rewards. There are two methods for earning, and that's the standard and the compounder. So I personally am in the compounder. So that's just because I'm a long-term holder of it, and I've allocated my the amount I've wanted to, and so I'm just going to sit back and watch it grow. And 20% is great. Now this can fluctuate depending on how much trading is going on.
Yes, exactly. It could get a lot higher if NFT market gets bigger.
And they just went through their last, or is the last one or the one before last? But this next, so their distribution of looks, it went through like a halving.
Yeah,
and I think it was early January.
I think that's right.
And
so that's once a year, right?
It was 30 days for the first one, then I think it went to 90 days, and then 180 days, and then this one goes, I think, 365 days to the next halving. So really, you can see it be around 20% or higher for the next year, and then I think it goes to their last one, which lasts like 4 years or 2 years or something. Got it. So I'd have to pull it up, but I don't want to search for it here.
I loved this part about the project when you first, told us about it. A long time ago. Just that concept of sharing with the community and it being in a sense community owned seemed pretty unique at the time. Marketplace.
I mean, that's what I'm looking to talk about in a nutshell. I know Michael wanted to show a couple charts for the legacy market. Boring, but that's fine. We'll take a look at it.
I like to try and find a few trades here. You know, this isn't financial advice. This is just charts I like and maybe some things I'm doing. But I got the chart up for team here right now. Do you have that up, Blake?
You need to share your screen.
Share. Okay, let me click over here. All right, I'm not as. Where's the share screen? Where is it?
Present at the bottom.
Oh, there.
We're all in the same room, in case you guys were wondering.
Is it sharing now?
No, I'm not seeing it.
Oh, what chart are you looking at?
I was pulling up team.
I'll pull it up on mine. This is making for riveting
Sorry, guys.
podcast.
Sorry, guys.
So I have the team. I have it up here. Obviously, we're past the close, so this is giving us our post price, which is pretty much the same as the closing price.
So if you see there, you know, that looked like a W bottom forming, and on the daily, and I liked that gap above the market around 170. So I bought just some shares, some boring stock at 148 on Friday, and because I think it's more likely going up. And then I went ahead and I sold the 170 call the February 3rd because it'll have pretty good time decay. And I got, you know, $500 for that, you know. And so
we don't know. We don't need to talk about how much money you got from it.
Yeah, well, I didn't. Yeah, it was to help you figure out your return potentially is if it breaks through 170 and goes to the moon, that means I'll lose the stock at 170, and my, you know, total return, I think when I calculated it was like 18%.
So
less than
wait, so did you? So are you thinking it's going up or down?
I think it's going up.
So if it goes past 170, you lose money?
No, if it goes past 170 because I sold a call at 170, that means I'm agreeing to sell it at 170 between now and February 3rd.
Okay.
And I was paid that premium. I was paid money to agree to do that. And
so convoluted. Just to say, is it going up or going down?
Sorry,
Jeez, I tell you.
I like to hedge. I'm more of a wimp, you know, but I like making money, you know, in a safer way.
It's an interesting volume profile down there. Like couple like really huge sell and a really huge buy.
Yeah,
that's really weird. Obviously this was off of earnings. I would assume that's what this whole dip at that point, and then the big sell here, and then we have, I don't know, that was a big volume day.
Yeah,
I don't know what that was going on there. Interesting.
And I like that we're going into earnings, you know, with, you know, the market looking, you know, better last week, and this is, you know, this is just a short-term trade.
What is this? Atlassian Corporation?
I don't know. I like the chart.
It's like I'm just like, hey, I found this random chart. I'm going to trade it. Done.
It's just a short-term trade for me. It's not a long-term hold.
That's okay. Put you on an island and trade a chart. That's cool.
Yeah.
So what else are you looking at?
You know, always looking at Tesla. I liked Tesla today. It broke through the 20-day for the 20-day moving average for the first time in a while, and actually closed above it. So that, to me, is a good sign, and they're going into earnings too. So it'll be really interesting to see what they report. But
so that's the 20-day in the white.
Yeah.
The top red is 200-day that I have on mine. So the volume looks nice. I mean, for this bottom area, I mean, I hold some long-term calls.
Yep.
I bought them around when Tesla was around 140. And I think I did 250 was the calls for a year from now. So I'm down.
Yeah, that is 40%. A bold move. That often works out well for you.
We'll see. Bring me back to the 200-day. Let's do it. Yeah. I'm in. We broke the 20-day. Next move, 200-day. Mm-hmm. I like it. What else you got?
Arista Networks was one that
What's the ticker?
It's ANET. and this one I think is more likely to go down. So I shorted it today just by buying a short-term put, because I think it's hitting up against that 20-day, and it's been trading under it, and
It's right at the 200-day.
Yeah,
as well.
Yeah. So this is a bet. My bet, because it's a short-term trade, short-term options trade, is I'm betting on this going down more likely than not is what I'm expecting, especially with that gap below the market. Just last week is almost kind of calling to it in my mind. So I think it could get down to 113 pretty easy.
Michael's a trader.
Yeah.
You guys haven't figured that out. He likes to trade. He likes to move in and out of things a lot.
Yep.
Some people think I trade a lot, like I move out a lot. No, I'm like, I'll buy stuff, hold it for a while. I'll sell stuff when I need to, but man, Michael's like in and out. He's like,
I like numbers. I like charts. It's fun.
Nice, man.
Yeah.
Nice. Okay. Well, I think that's a good one. What else you got? Anything else?
We could look at SMR. This is just more interesting that Blake brought.
Yeah, Blake brought this up over the weekend, and
I think it's an interesting company, actually.
Why don't you tell us about it, Blake?
Yeah, so they're a Portland-based company. They're based out of a small, I guess, metropolitan area of Portland called Tigard, and they basically produce small-scale nuclear reactors that kind of mimic the technology they use on nuclear submarines. So it's very compact, recyclable materials that are used within these reactors. And so they currently are the only U.S. company that has the licensure to produce these types of capacitors that exists right now. They have a bid in Idaho, I believe it is, starting in 2029 to 2030. They will be building, I can't remember exactly how many reactors they're going to be building in Idaho, but that's kind of going to be their test run, for an example. But it's really cool because of the form factor. I mean, they take out, I think, the calculation I saw was you could power Portland off of less than an acre worth of land space, just from the amount of power that these are able to produce. And I believe they use thorium as well, which is just way more recyclable, way less volatile. Just from a security and safety standpoint, it's so much easier to use, and the fail-safe applications are so much better than traditional reactors.
Imagine the amount of Bitcoin I can mine.
Well, that's the thing. I mean, you think about the biggest detriment to cryptocurrency is energy usage. I mean, it takes a lot of energy to mine these resources. It is comparatively probably one of the most wasteful industries on the energy sector side. I think people argue. And I think governments, especially, that's a big deterrent for them. The environmental lobbyists and stuff are so far against it.
Oh, yeah.
If we were able to produce all of these transactions and run the blockchain on, a renewable energy source like nuclear energy, or a consistent energy source like nuclear energy, it just really allows the industry to grow at a pretty intense rate, I think. And so the fact that they're able to build these modular nuclear power systems,
I mean, that'd be cool to see. I mean, that's a great, the fundamentals of it sound awesome. I need to dig in a little bit more. I've just looked at a little bit from this weekend and this morning when we were talking about it, but technically it's interesting. You said this was this pump was kind of the time frame where they announced the Idaho
so
deal.
July is when they the government gave them their licensure, that's when it was announced that they were going to be doing this project, was in July. So you saw that big pump, and then I would just assume just overall market conditions created an opportunity for it to get depressed a little bit.
Yeah, so we're sitting right at the 20-day,
but we're back to that pre-July level. So it'll be interesting to see as they continue to progress.
It's definitely going to be on my watch list now.
Yeah, I'll have to check it out. So otherwise, what else you guys got? Let's get oil. $81 US oil.
I don't know if we want to look at yield curves at all, bond yield curves and treasury yield. I mean, it is kind of interesting to look at from a historical standpoint. We're kind of in an inverse yield curve right now.
Okay.
And, kind of historically, if you look back, you see once the inverse yield curve flips back to a normal yield curve, if that is a steep increase, that almost always precedes another recession.
Do you have a chart for that?
I do. I'll actually, let me do this. And then this is the current.
Okay.
So you'll see, when you're at an inverse, and that just means, consumers have less faith in long-term bonds.
Right.
When that yield curve is trending downwards, it's not the best time to buy U.S. Treasury bonds because that's just the greater risk of default, I believe. But what you see when those steep changes happen and it flips hard back to what is called a regular curve, I guess, that precedes recession. And so if you look right now, if you look at where you're at the end of that, 2022 year, we are in that inverse relationship right now. And so if that is a stark flip, it.
Yeah, because I guess you can look at, where we're at in other charts. This was 1993, 92. Yep. This is 2002, 2003.
Yep.
So you're in those time frames, what those markets were doing.
Mm-hmm.
That's interesting.
And if I understand it right, like an inverse yield curve means that the shorter term bond is selling for more than the longer term bond,
exactly.
Which is opposite of what you would think.
You would think the longer you lock up your money,
you should get a better,
the greater return you would get on the back end.
And that's normally how it works.
And that's how it should be when the government is working right and markets are working right.
Exactly.
Because the shorter term those bonds are valuable at, it just shows that people have less faith in the market on a long-term scale. So
right.
It's interesting to look at. And, right now on a daily level, it is still an inverse curve, especially on those longer time frames. So it's just something to keep an eye on.
Well, so again, if we go to, let's say, this steep curve, what is this, 2014? 14?
Yeah, 2013, 2014.
So get my little line here, 13, 14. So we're in this range here.
Yep.
So, that preceded the 2015 and this was the 2004.
Mm-hmm.
I think I have it in 3 here. I don't know, man. Like, markets seem to react more positively. This is 93.
Mm-hmm.
The thing is, I think we have to go to when it was the inverse, right? So when it breaks that zero line, right?
It is when it flips.
So I'd be looking at those timelines, Nate.
Oh, I see what you're saying.
Like where it goes under that zero. That's the point
I was going at the peaks to see right here.
Yeah.
So we're sitting right here where it went below. So this is, again, what is this going to be, 989?
Mm-hmm.
Okay. So you're looking in this range here. Yeah. You can see we sideways action, a little down.
Yeah.
Let's see. Next one here. This was 2000. We all know what happened in 2000.
Mm-hmm.
Wait, were you born yet, Blake?
I was like a year old. .com crash?
That's 2000. Yeah, that's .com crash.
It was ugly.
That was ugly.
Same thing with the 2008.
2000. Yeah. So this is the real estate crash.
Yep. That's
right here. Yep.
So
okay, down only people ready.
So I would, it is just looking at, when does that curve inverse and the rate that it inverses, because if it's a steep flip right away, that's what you see before these big downticks.
Yeah, and it's the break here.
It
like
is.
You're saying here, it's where it's broken this pattern or this midline.
Mm-hmm.
That's interesting.
So we're beneath it now, and so I think it'll just be how it recovers.
Well, and the other one is like preceding that. When we look at what's been going on before that, this before this dip down here, it's been pretty steep in this 2021 timeframe, but preceding that whole time frame, it came all the way up into 2020, just dropping to that midline.
Yep.
Right. And so you're saying it has to do more with that like level.
I think so.
Of steepness.
That would be the slope basically of your change once you get back to a regular quote unquote curve.
That almost makes sense to me intuitively, because like that seems like the smart money is planning ahead and is like, I want the 10-year treasury now.
And what that does
I
is
don't
it
want
just
to be
hurts.
risk on assets.
I think that's why you see those depressions, is because it hurts the short-term economy. right? I
Yeah.
mean, as soon as they
Right.
make those, if everyone flips their mindset and immediately goes long on everything in these markets, there isn't room for short-term growth in the economy. And so I think that's where you start. That's why we see these recessive periods.
Thanks for sharing that.
That's an
I'm
interesting
gonna
one.
add that to things I look at.
I'm not the most knowledgeable about yield curves. I, try to take a look at them when I remember about them, but it is on more of that fundamental side. I think it's good to look at.
Cool.
Thanks, man.
All right, guys. What else you got?
Do we want to talk about Galaburn a little bit?
Nah, I think we've touched enough on Gala today. Maybe we'll do a more in-depth on different crypto projects and not just the market of them, and go in depth on the fundamentals of them later on.
That's a good idea.
Cool. All right, guys.
Yeah.
Have a good day.
Thanks, everybody.
Yep.